In this week's episode of the Stockscores Market Minutes, we're going to look at the market weakness from last week and figure out if that means we've got another market crash coming. I'll do my normal market analysis. We'll look at the day trade of the week on CBLI, and I'm going to show you some ways to make money if there is, in fact, another market crash. So, is there going to be another market crash? Well, we had some weakness late last week, and it's starting to test some important upward trend lines. Now, if you've been watching my videos every week, you will know that I have talked about the importance of a breakdown from a falling top through the daily upward trend line. And this week, we've actually closed below that trend line. And that means that there is some real risk that we are going to get more weakness in the near term. Now we'll jump to the chart in just a moment, but the key thing is to watch for that break of the upward trend line and then also some shorter term support zones on the intraday charts. We'll jump to that in just a moment. Now you can profit from further market correction by buying inverse or volatility ETFs. And at the end of this video, I'm going to show you exactly what to watch for, what to trade, what to watch, and we'll see if any of those things happen. Now remember, timing is everything. We really don't have a strong signal yet that the market is breaking down, so we want to wait for the signal because there's also a good chance that we are going to bounce up off of the trend line and continue to hold. Remember that we as traders are not risk takers, we are risk managers. And that means we really have to focus on effective risk management so that if we're wrong, we take a small loss. And if we're right, then we can lock in that bigger profit. So let's jump to the charts now. And here is the chart of the daily chart of the S&P 500. And I've drawn some things on here already. So we have the green upward trend line here. We also have horizontal support here. And the thing that I want to highlight is that we've been building these falling tops. What that means is every time the buyers could push prices higher, they couldn't go as high as they had the previous time, and that's a sign that the buyers are losing strength. And then more short term, in the last couple of weeks, we made another falling top, and now we've broken the upward trend line on Friday, and we are testing this little horizontal zone here that could prove to be the critical point. So I think what you want to watch for is if the daily chart closes below 300 on the SPY, then we've got a technical breakdown, and that justifies trading for further market weakness. And as I said, at the end of the video today, I will show you some of the vehicles that you can use that will go up if the market does in fact correct lower. All right, so at this point, I'll just jump out and say if you would like to get instant updates when I upload a new video, make sure you subscribe to the Stockscores YouTube channel. Click on that notifications bell. If you like the video, click on the like button. It helps get more views. And please, if you have any comments, I'm happy to read those, so leave one as you wish. All right, let's get on to the analysis of the US markets, and we'll go a little deeper into that S&P 500 chart. And starting us off here, we have the intraday chart, and this is the other critical one that you want to watch next week. So see how we've built this floor here? We've bounced off of 300 a few times, and we're right at it again. If we get a strong breakdown, then we will have a break from what's called a descending triangle pattern. And what this pattern essentially means is that the buyers are losing control and the sellers are picking up the power in the market. They are showing a greater motivation. And you can see we had a little bit of volume accelerating to the downside late last week. And again, if we can break down through that 300 and start to close through that 300 level, I think we could see some difficulty for the market. Looking at the longer term chart, this is, of course, the weekly chart, and this is where we see that falling top pattern. I often talk about falling tops. So we had an upward trend line broken. This is the weekly. We rallied back, surprisingly perhaps, built a falling top, and now we're testing this upward trend line. And so if we start to break down through that 300 level, I think we could see some weakness. That's okay. I think actually you can make a lot more money on corrections than you can on actually buying the market long term. But you have to know what vehicles to trade, and we'll talk about that at the end of the video. All right, moving along to the Russell 2000, and you can see here the upward trend line is also being threatened. I just quickly drew that across these what we call inflection point bottoms, and we're starting to move down through that from some falling tops, and that could lead to some market weakness. On to the Canadian markets, and the Canadian markets have a pretty similar looking chart. The Toronto Stock Exchange Index, T.XIU is the ETF, also building those falling tops in the short-term chart, but a little farther from support. And so if we start to break down through that 2280 level on XIU, then we could see some pullback down into perhaps the $22 level on XIU. Looking at the longer-term weekly chart, very similar pattern to the S&P. We've got the falling top on the weekly, and we've sort of been rounding out this upward trend. We hit a new local high, and now we close below the open. Now we're starting to test the support zone. So I think there's a real legitimate concern that we could see more weakness here. We just need to see that breakdown, that trigger point that shows us that the sellers are running for the exit door. Looking at the TSX Venture, surprisingly strong, largely because a lot of gold stocks in this market, and gold has been doing well. So we're in a nice upward sloping channel. We are at some resistance here, and so we may stall short term, but there are some good opportunities in those Canadian micro-cap stocks. On to commodities. We always like to take a look at gold and oil. Let's start with gold, which has a good long-term upward trend in place, and we've just broken out through resistance last week. We talked about the likelihood that we would break through that resistance level. Well, we did that through the week this week on fairly light volume, so that's not a real strong breakout. It's more a signal to continue to hold those gold stocks if you have them, because they are generally in upward trends, and there's no reason to sell them yet unless we see a break of this upward trend line from a falling top. I would continue to be bullish on gold stocks, but I think in many cases it's just too late to enter them. It's more the case of holding them if you have them already. On to oil, which has been slowly grinding its way higher. I would call this sort of a drift to the upside, not really a excited buying. You can see volume is fairly light. It's very oversold market down in here. We've come back up to this resistance level. I think we're going to get stuck here short term. If we can get a strong directional break to the upside, then maybe we can be a little more enthusiastic about oil. But for now, it's kind of a market where the selling has maybe dried up. It's not so much that there's strong buyer interest. Moving along to fear, we always take a look at the fear chart. That is the chart for the VXX, which is the Volatility Index, ETN, and it is an indication of whether traders are looking to buy insurance in the futures market through the S&P 500 futures. And it's using something called the implied volatility of those futures contracts. The more people are willing to pay for those futures contracts, the more they expect future volatility to be higher. So when we see the VXX start to move up, it means that traders are concerned that there's going to be some volatility in the near term, and it's a way to make money from the market going down. We'll return to this concept in just a moment, but looking at that chart, we did break the little downward trend line, but not from a rising bottom. Well, now we have built the rising bottom, so we're starting to see some optimism building in fear. And so if we start to get a break to the upside here, that would be a sign that the market is in fact going into, call it phase 2 of the correction. And this is an important chart to watch for just that reason, because it often is a good way to profit from the market going lower. So my ratings then, US stocks, my long-term rating is now neutral, my short-term rating bearish. We are building that little bit of a bearish pattern short-term. Canadian stocks, same rating. Gold, I'm bullish on both time frames. Oil, long-term neutral. Short-term is still bullish, but it does seem to be losing some of that momentum. So we are seeing pessimism slowly increasing among stock investors, and the market may soon break down through support. We're going to watch for that, because if it happens, we're going to take a bearish approach to trading and try to make some money through the inverse or volatility ETFs. I'll show you some of those in just a moment. Or we can profit from the alpha stocks. We've seen, for example, vaccine stocks doing very well despite the market's weakness the last couple of weeks. Those stocks have been doing great. So there's always a way to make money to the upside on individual stocks, even if the market's going down. We call those alpha stocks. They are trading on their own story. Gold is trending up, oil is relatively stable, and fear is elevated and starting to tick a little bit higher. All right, so now let's take a look at the day trade of the week. And this is really just an example of how we apply my algorithms to day trading. And what we do every day on Stockscores with our active live service is allow you to watch my analytical screen, where we run an algorithm on every stock that trades in the United States, looking for those making something called an action candle. And it spits out a screen that you see here now. This is the what we call a radar screen. It's through a program called TradeStation, a great program. I encourage people to use that if they want to be a more sophisticated day trader. And just to give you a little idea of what you're seeing on this screen. So here is the time of the action candle. So you can see here, for example, CLDR made an action candle at 9:32 on Friday. Its volume rank was 1. That meant that the volume for that 2-minute segment was the highest of the last day. So going back to the previous day. And then we've got some other numbers here. Now these are closing numbers. And the important one that we want to look at is this one right here. This is the RR, which is reward for risk. It's how we measure performance. So we measure performance in terms of reward for the risk taken. So if we risk $100 and the RR is 2.28, that means for every $100 of risk, this trade profited $228, 2.28 times the risk. If we risked $1,000, then we made $2,280. And that's before commissions and slippage. And so what you see on this screen is all of the action candles from Friday, as well as their performance at the end of the day. So anything in the green is profitable. So the biggest trade on Friday was CBLI, which made a 25.78 reward for risk multiple at the close. Now the maximum reward for risk through the day was 28.11. We're going to jump to the chart of CBLI in just a moment, but that's what you're looking at here. So anything in the red was a loser. So for example, a bigger loser on Friday was SNGX. It lost 3 times its risk. That meant it lost $300 for every $100 of risk. And then we've got the amount of capital required to take the trade. That's before leverage. And the entry price was $2.17. The entry time was at 11:46. So those are all the things that you can see on Active Live. And this is a service that is available to the active trader members of Stockscores. And it's really the basis for all of those day trades of the week that I discuss each week. I thought I would just show you how the signals are generated. So let's jump into the chart of CBLI, which was the biggest winner on Friday. The entry signal came right there at, I think that was 9:36. And you can see a little pink dot on that chart. That is our action candle indicator triggering. And so the entry price was at, I believe, $1.90. And the position size for $100 of risk was 1,110 shares. That was $2,190 of capital. Because the stock is under $3, most brokers will not let you borrow against the position, which means you cannot margin it. That essentially means you have to put up all of the capital, so $2,200 of capital to take that trade. At the end of the day, it was up 25.7 RR, which was a $2,570 gain, a 117% return on a one-day hold. And that is a great day trade. We're getting these double-digit RR trades, at least one a day, sometimes 2 or 3 a day. And it's just been a great market for these fast-moving stocks, even though the overall market hasn't been awesome the last 2 or 3 weeks. We're still getting these big movers, a lot of them in the biotech sector, as they all sort of look for ways to treat or deal with the COVID-19 epidemic. All right, so let's jump into some ways to make money from the market going lower. So the first one that I want to show you that I think everyone should watch next week is VXX. So this is an ETN, exchange traded note. It's something that trades on the American Stock Exchange. And what you want to watch for is a break through this $38 level. So this is a 15-day, 60-minute chart. And you can see that we've got rising bottoms. So there's starting to be a little bit of a pickup in the fear. And if we can break out through this, which would correspond to a breakdown in the overall market through that $300 level that we talked about on the SPY, if the market starts to break down through 300 on the SPY, I would expect the VXX is going to jump up through this $38 level. And it could accelerate very quickly. We see this thing often move very fast when there is a market correction. For example, back in earlier in June 11th, it moved in one day from $34 to $43, $44 within a day or two. It's a rapid mover when the market is correcting. And so this is one vehicle to watch to see if that happens. Now, there's also some inverse ETFs. There's all kinds of them. If you want to know all of them, just do a Google search, inverse ETFs. But probably the most traded is SDS, which is the inverse leveraged on the S&P 500. So I just punch in the symbol SDS. It is the ultra short S&P 500 Pro shares. What we're going to do is look at this on a 15-day time frame, and you can see that it's building rising bottoms, and we have resistance here. So if the market were to break down through 300, I would expect that this is going to break up through that level. So this should go up if the market is going down. There's other vehicles. There's an inverse on the Dow. I believe one of them is DOG, which is the inverse for the Dow 30. And again, let's look at a 1 month 60-minute chart. And here you can see a bullish pattern building. There's always ways to make money when the market goes lower. And this is one, starting to build rising bottoms. If this little instrument here can break up through $49.50, $50, it may start to accelerate to the upside. On the Canadian side, I know we have many Canadian viewers on the channel here. So there's T.HXD, which goes up when the market goes down. And again, let's take a look at that 15-day chart. And if this breaks through this resistance level, we're starting to build rising bottoms. We may meander in here, but if it breaks out on HXD, that would be another way to profit from the market going lower. So some things to keep an eye on next week. I'm not certain that we're going to get phase 2 of the correction, but certainly there are some signs that we could. And we want to watch out for that. You can make lots of money from a market correcting, either through some of these inverse vehicles or through some of those alpha stocks that do well when the market is going down. So keep an eye on some of those, and make sure you subscribe to the channel. Stay tuned. Click on that like button. Make sure you click on the notifications bell. I'll try to keep you updated, especially if there is more market weakness. Have a great week in the market and trade well.